Hello, I'm Kelly O'Byrne and welcome to LCG's preview for the week ahead. I'll be talking to our Head of Research, Jasper Lawler, to discuss Apple and the latest for tech stocks, how the trade war is offsetting strong earnings, and whether we're in for a summer volatility spike. Before that, I'll run down some of the top corporate results to watch this week. HSBC and UniCredit give half-year updates, while Twilio and Marriott report second quarter earnings all on Monday. Domino's Pizza, Intercontinental Hotels Group and Standard Life Aberdeen report half-year earnings, as Deutsche Post, Walt Disney and Snap report quarterly earnings on Tuesday. Imagination Technologies offers up full-year numbers, while Prudential announce half-year results, and Glencore, Michael Kors, 21st Century Fox and Weibo update on second quarter results on Wednesday. Cineworld and Legal & General report semi-annual results, and Deutsche Telekom, Adidas, WorldPay and Dropbox report quarterly earnings on Thursday. Then finally, Porsche report half-year earnings on Friday. Now moving on to the economic calendar, major releases begin on Tuesday with Chinese foreign reserves in July, the Reserve Bank of Australia rate decision and the German trade balance for June. On Wednesday, it's China's trade balance and the RBNZ rate decision. On Thursday, it's China CPI and the US Producer Price Index. On Friday, it's Japanese GDP for the second quarter, UK second quarter GDP, UK industrial production for June, and US CPI for July. So Jasper, some relief for tech stocks after Apple results?
Yeah, I would say so, Kelly. I mean, a lot was hanging in the balance with those Apple results, actually, because we'd obviously had some pretty disappointing results from Facebook and Twitter. Both of them were down 20% in a week. So it really required Apple to step up to the plate to reassure people that these FANG stocks, particularly those top five tech stocks, were actually still able to lead the market higher. And so Apple's results are pretty strong in most respects. And so now the talk is, rather than the demise of the tech sector, it's more about, will Apple reach that $1 trillion market cap, which looks like probably it will in the not too distant future. So I think the issues at Twitter and Facebook are quite specific to those companies. And they're, while the FANG stocks are grouped together because of their performance and because they're broadly technology based, Amazon, strictly speaking, is consumer discretionary, actually they're quite different businesses. So I think probably the lesson to take away from this is that you do have to still be discerning about what the prospects for these companies are, especially when they're at such high valuations. And we say it every time, but that's why they make them. That's what makes them good to watch at earnings season, because they do very well, or if they do badly, there's disappointment because they're so richly priced.
Of course. But switching gears, can you give us the latest on the trade war?
So the latest is that Donald Trump is upping the ante on the $200 billion. There's lots of different figures. There's tariffs already in place for $40 million, $34 million. There's talk of the full amount of imports of Chinese goods into the US, which is around $500 billion. But Trump has already referenced $200 billion worth of goods and a 10% tariff on that. And so now it's being up to 25%. And that was a day or so after we'd heard other reports that actually the US were looking to return to the negotiating table. So this is a pretty fluid situation. It's changing all the time. But what I think we can learn from all this is that Trump isn't really going to be backing down anytime soon. And it seems like China probably aren't either. So far, they didn't retaliate to any talk of that 10% tariff because it's not been put in place yet. But to the 25%, it looks like they will try and respond. And they already have kind of tacitly responded to the forex market, because the Chinese yuan is down about, I think, 8 or so percent in the last couple of months. It was quite a big move in currency markets. So that currency market move has already almost offset those previous tariffs that were referenced. Hence, I think the reason Donald Trump is aware of it, he's talked about his desire for a weaker dollar, and he's particularly looking at the Chinese yuan. So he's now having to double down on the trade war. The only trouble with this whole scenario is, and why it can spiral out of control, is that when Trump doubles down on these extra tariffs, the market views as inflationary for the US because all these goods coming in are now going to be priced more to include this tariff.
Okay.
So the dollar goes up in value because people think, well, the Fed's going to have to raise rates more to offset this inflation. Dollar goes up in more value. The yuan goes down in value again. So then he has to add more tariffs to offset it. So you can see it's that's kind of what's starting to happen. And maybe that's what gets markets worried.
Mm-hmm. And perhaps related to the trade war, again, we get a spike in volatility this summer?
Well, for that reason that we were just discussing, I could see how this is difficult for the market to really price in the likelihoods of these scenarios. Before, the assumption was that it was just going to be a kind of protracted negotiation tactic before the elections in the US. But I think maybe the combination of all this trade rhetoric and the fact that there is going to be some political uncertainty in the US, and we're still taking leadership from US markets leading into those midterm elections, I think there's probably a higher than normal chance that we get some kind of spike in volatility, especially in equities where things have been going sideways really for a couple of months. Really since the February crash, we recovered, we've been going sideways since. Tech stocks did make new highs, but most things haven't. And they're looking a little bit weak. I can see that we would suddenly slide into some sort of big summer rout. And China's obviously a hot topic. And the last time we had that were really big summer rout was in 2015, and it was all centered around China.
Okay, it remains to be seen.
Indeed.
Thank you, Jasper. And thank you all for watching. If you wish to see these videos as soon as they're released, please follow LCG on social media.